guys, I had too many traders reaching out to me asking how are we going to trade Netflix today, so I thought I'd put a quick video. Here it is, guys, how to trade Netflix options today, January 22nd, 2020. We are expecting an easy move 11 followed by a move 3 formation intraday. Here's what it means, guys. Basically, initial reaction is what you want to track, and you want to trade in the opposite of the initial reaction. So yesterday when this stock announced earnings, and please guys, if you're a trader, there is no reason to focus on the actual earnings. As a trader, what you actually want to pay attention to is the reaction to the earnings. For example, in the video yesterday, I've pointed out how the institutional behavior in certain sectors right now is such that even when the companies announce bad earnings, what do? They buy the stocks anyway. So if you focus on the earnings, you would think that you want to short these stocks based on bad earnings, but initially it actually makes sense to buy calls when these stocks reverse a day or two later, show signs of weakness. That's when you want to buy puts. So in the case of Netflix, it is different. Okay, actually the results are not too bad. It beat on earnings, but it missed on sales numbers, so the results are kind of mixed. So the initial reaction is higher, so it shuts up to 352, then drops all the way to 327. Then it creates a move 11 formation type pyramid. Basically, this is a bearish move. So pre-market, at the time I'm recording this, about 9 a.m., guys, it trades at 338. We're expecting a full-blown reversal with the first target being at 327. So it's actually going to touch this 327 level probably in the first 30 minutes of the open. So the moment the market opens, you want to pull the trigger, you want to buy puts on Netflix. Now, that's a simple answer. The next thing you really need to understand is what strike do you buy, and I'm going to show you specifically what strike to get at the end of this video. Now, also you need to understand if you're a day trader, how are you actually going to trade it throughout the day? So considering this is a move 11 pre-market, there's a high probability of it forming a move 3 intraday. Move 3 intraday is going to look like this. Basically, don't expect it to continuously drop and drop and drop. Yes, there will be some buyers coming in. Now, the volume to the downside is going to outpace the volume to the upside. So basically, expect these bounces, spikes, and what you want to do is you want to use them as entry points, and overall, it's going to look like this after you pull up the 1-day, 1-minute chart in Netflix after the market closes today. So with that said, what you want to do is basically, the way you want to trade a move 3, guys, you want to focus on shorted intraday bounces in the stock. So every time the stock is going to look like it's reversing and going higher, the bulls are going to get a sign of relief thinking, oh, yeah, they are buying the dip in this one, so it's going to look like you're going to want to buy some calls. But stay away from that. What you really want to do is just focus on shorting the tops, the bounces intraday. As you can see, if you take a look at the 10-day, 30-minute chart, okay, we've got a couple other time frames we're going to look at real quick, guys. But the 10-day, 30-minute chart basically shows you the stock has been having a very difficult time crossing this barrier of about 345. So the path of least resistance in the stock is actually lower, not higher. So what you really want to do is trade in the path of least resistance. So try to break out here multiple times above this key level of 345, 350. The only way it could have done so is using this catalyst as the earnings to propel that move above that ceiling, that resistance level. But even though it could have happened, it failed again. And it failed multiple times after hours and pre-market as well. So at 338, it's likely to reverse and fall lower. In order to select your strike price and trade this, you really want to understand how big of a move can we actually expect. So we're going to break this down by actually taking a look at a longer time frame chart. So here's the weekly chart on this thing, guys. First, you have to understand that there is an easy, simple mirror image that we can look at this chart by analyzing this longer time frame and the history of these highly repetitive middle finger action. That's a proprietary term we use on this channel, guys. Basically, when you see this middle finger kind of on the chart represented by this volume sticking out right here, notice what happens next, right? The stock drops, pulls a little bit higher, and then it drops again. Similar conditions were met right here, and we're fixing to replicate exactly what has happened in these prior two cases right here. Now, nobody's talking about it out there, and this is certainly not your ordinary way to look at charts, but that is what is actually required in order for you to become a powerful day trader and finding these crazy trading opportunities. Guys, if you're not familiar with charts, this is your chance to click the link below, get some more information, get studied up so you can set some trading records this year. Now, zooming in on this daily chart, what we're noticing is actually the setup, the way institutions were trading it, okay? They were really looking to break this higher in the formation of this bullish crossover between the blue line and the orange line. So this would have been a strong breakout, potential breakout in the stock. But what we are going to get today is a failed breakout where the stock could have broken out higher, could have created this bullish crossover, but it's actually going to fail to do so. Now, understanding where the stock set a low yesterday creates your first target price, basically the 327. So when the market opens, you basically buy puts, okay, above. You want to buy the strike price above where your target price is. This is a typical mistake that a lot of traders are making. You know, oftentimes I talk to a trader like, wow, I think it's going to drop to 320. So I'm going to buy the 320 strike puts. Well, understand this. If it doesn't fall below 320 and your options expire within a day or two on that day, then the 320 strike is not going to be worth much, or very close to a zero. So understanding this analogy that I just described to you guys, focus on buying the strike above your target price. So if our first target price is 327, then at very minimum I want to buy the 330 put. So by the time I'm actually going to get to the 327, okay, my option is going to be worth at least $3 plus. So depending on where the 330 price is going to be when the market opens, okay, you really want to understand, okay, is this a good deal or is this not a good deal? Meaning, if let's say the 330 strike is going to be priced at like 10 bucks, okay, and let's say the stock drops to 327 but never goes substantially lower below that, then your chances of making a ton of money is just not too good. Okay, but if it's priced, let's say, around 5 bucks, the 330 put, then it is a reasonable deal if you calculate all the other target prices that we're considering. So today, considering that today is a Wednesday, your options are going to be worth more than just the intrinsic value, more than the value of your strike price, less your target price. They're going to be worth, you know, extra 3 days of time left on the contract that could be priced, let's say, additional 50 cents and additional dollars. So basically what you want to do is, if you're buying 330 and your average target price is about 322, then by the time that hits there tomorrow, your worst case scenario is you're going to break even. Now, if it hits a target price lower, and it also your option valuation has to do with how fast something drops. So you can get substantial premium if it just continues dropping when the market opens and maybe it dips just slightly under 320. Okay, then these options could be worth, you could be paying 5 bucks for them, you could be selling them for like $13, $15. So that's basically triple the money. Nice and simple, easy trade, guys. But without calculation, looking at this multiple time frame chart, so we think it's reasonable that Netflix will hit right out of the gate about 327. It could potentially hit 322 and 315. So what you want to do is you want to buy a position and you want to steer step out of the position. Let's say you acquire 3 contracts. Well, you want to start selling when it starts hitting your target levels, right? So sell one at 327, sell one at 322, sell one at 315. Now, depending on how active of a trader you are, okay, based off what the stock is doing pre-market, if you understand the 13 markets move formula, you can really create a ton of powerful trades, actually day trading the stock on the bounces. So if we're to do like a key takeaway, by the way, these areas right here mean that MACD is going to break lower, accumulation distribution is going to break lower today, and this by the end of the day is going to show a move lower in the stock. So basically overall, we are not expecting the stock to break below 300 level. It could stop out about 307, 308, 315 area right there. So, but, you know, it could bounce intraday before it ultimately gets to those levels. So your key takeaway, the way you want to trade this today is basically you want to enter the trade, collect when it starts hitting some target levels, wait for the bounce. You want to enter the trade again on the put side on the bounce, collect your gains again on the drop, wait for the bounce, enter the trade again, and when it drops again, collect your premium again. Guys, very simple stuff. If you focus and you don't buy into the fact, oh man, they're buying the dip, it's about to go back to the moon. If you focus on executing this, you will have multiple successful trades on Netflix today. So it's very simple, but you do want to pay attention again to the strike price. Right now, it's trading at 338. So ideally, I want to buy 340, 335, 330 strikes on Netflix. Okay, so again, focus on shorting the intraday bounces, focus on this right here and make it an awesome trading day. I'll catch you guys on the next trade soon.